to the rationalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the rationalinvestor.com's daily brief. If you know what song that is, then you know what Liam and I were singing yesterday. He loves his Inspector Gadget. Anyway, had a good afternoon, and somebody in the video call here in the Zoom call just was hoping and wishing that we had a good time yesterday. And I'd say on balance, it's a bit of a challenge with autism. You never know what you're going to get from one day to the next, but on balance, I'm very fortunate to have Lily in my life. So let's see if I can make a positive difference in your lives today. Unfortunately, it does look to me like we're in a bit of a tough slog here. I do like the fact that the breadth indicator here basically gave us a major warning right around guess whose birthday, eh? Sell in May and walk away. Oh boy, what a mess. And the problem, of course, as almost always, is public's always most bullish at the top. And by the time we actually get washed out and we're actually getting ready to rock and roll a new bull market, there's nobody around, nobody's interested. But anyway, we'll see how it goes. Pleased to see, of course, in the fast index, we are officially oversold. You can see how slow is ramping up here. And I would actually imagine, kind of like how really you could argue the month of May, probably latter part of April, and basically through the month of May, we topped out. I wouldn't be surprised if through the month of June, we slowly saucer bottom out and bottom. One thing that leads me to believe that we're close to some sort of short-term pivot, we'll probably have a dead cat bounce maybe in the coming week. As you notice, the histogram, and this is really, I think, the way that we want to use this. We want to try and identify situations where the market is heavily oversold in both the short and medium term. And those represent absolutely incredible buying windows. And then conversely, if you see everything heavily overbought in the short and medium term, those are run for the hill signals. I get the impression that this is kind of like it's a short-term situation. And if anything, this kind of makes sense. US dollar's been pretty darn strong of late. And Econs coming out today, which I suppose we'll talk about shortly, kind of paint that maybe the Fed doesn't need to be aggressively raising interest rates, but at the same time too, I don't see rate cuts anytime soon. So maybe we get like a bit of a short-term bounce in a lot of these international currencies versus the US dollar, as it just does nothing more than clean up this short-term oversold condition with all the currencies. In fact, actually, one of our site members was specifically asking about me making reference to the country funds recently. So I think in the after party, we might circle back around and take a look at this in a little bit more detail and try and explain how the country funds work and how this information works. What we really need is a library of all these images and the dates when you see egregiously overbought or egregiously oversold. I'm not quite sure how I'm going to do that. I do know I can remember specifically off the top of my head a few specific dates when we actually did have that image. It's just a question of going back over time and finding them, but that's probably a project maybe I'll try and address over the weekend. Anyway, point of the matter here is I think we're getting maybe a little bit too oversold here in the short term, but the problem is that the medium term, we're kind of flatlining here. We're not really overbought, we're not really oversold. So as a result, if this starts firming up here, we could very easily push our way through the summer. And quite often, like the best trade setups, like if you ever, do yourself a favor, get the Market Wizards books, Jack Schweiger. In fact, I got them sitting right on my desk here. And one famous trader he interviews year after year after year. He'd always come in and just buy a whole bunch of well, actually, I think he would sell a whole bunch of S&P futures contracts the middle of August, and 9 times out of 10 into like October, he's buying them back at huge profits. Such a cliche trade. So I wouldn't be surprised if, like, over through May, June, this saucer bottoms out. Then through July, August, maybe even into early September, we see that everything gets nicely overbought. And of course, that sets up for a nice dump. I don't think the dump's going to be too aggressive because this is an election year. And the guy who's in power down in the States right now, I think he'd like to try and keep his job. So he's going to do everything in his power, including what I find fascinating is we don't even really seem to live in a time of laws now anymore. So, Mr. Biden was explicitly told by the Supreme Court of the United States of America that he cannot do this, and he just went, "Meh, I'm old. I sniff little girls' hairs, so you can't tell me what to do." So he goes and does whatever the hell he wants. Anyway, Brian just trying to be funny, but probably didn't land, probably landed flat. So we'll see what the hell happens this coming fall. And of course, as Chris, I think, labeled this broadcast, market's probably not very happy over the fact that Mr. Trump was basically convicted. He is now a convicted felon. And I would imagine the propensity for civil war in the United States is ratcheting up by the day. Especially now that a lot of the sort of right-leaning of the electorate can actually look at Mr. Biden and basically say, this guy's just breaking the law. He's just doing whatever the hell he wants. So we don't even have a constitution anymore. And they always said that Mr. Trump was the last U.S. president. Maybe Mr. Hair Sniffer turns into a little dictator and dies in office or something. And that's the end of the United States of America as we know it. Who knows? Anyway, tumultuous times we're living in. And don't get me wrong, I mean, my country's no better. I thought it was interesting to see that there's actually now a net immigration. I don't know, emigration. I think it starts with an E. From Canada into the United States, which is hilarious. So, situation in my country is no better. In fact, I was even tweeting out. It's fascinating to listen to the very few social media voices that are still consistently talking in my country and just outlining how it's bizarre. It's like our democracy and our whole society is literally dissolving right in front of our eyes. And there doesn't seem to be anything we can do about it. Shocking, really. Interestingly enough, on markets wise perspective, there were plenty of guys in the Schindler, right, and all that, who did very, very well under fascist governments. So the capitalists, as long as they grease the right palms and bribe the right politicians, I suppose they'll continue just being the oligarchs that they are. And to a certain degree, I think you can see that the sort of divide between the rich and the poor is just getting wider and wider and wider. And we're probably going to slip into some sort of fascist dictatorship here in North America. Just fascinating, absolutely incredible. I would not have bet that this was going to happen. Anyway, it is what it is. Our job hopefully is to be on the right side of the chalk marks. Try to buy when prices are going up, sell when prices are going down. And unfortunately, and really what that often means is We just have to sit here and do absolutely nothing a lot of the times. Actually, today in crude oil was a good example of just sitting and doing nothing. I was having fun paper trading the ES this morning. Got off a winning trade, got stopped at scratch on my runner. I was short, and then the market just absolutely collapsed. So that was a bit of a frustration, but yeah, that's a trader's life. Um, but as the breadth sort of indicates here, and I think this generally speaking, like I said, we can go into more detail in the after party and talk a little bit more about these various different sectors and stuff. But the message of late has been pretty consistent for you people. I don't think, in fact, I even remember when I was talking to you recently, I was like, just look at this image. Is this going from the upper left to the lower right? And if that's the case, then that's a bearish market state. It is interesting to see that the utilities as sort of an interest rate proxy and the bonds themselves, but utilities are sort of your stock market, and they always say stocks lead everything. So utilities in the stock market should lead the interest sensitive sector of the economy. You can see how they're trying to turn up here. And we got some interesting economic data out this morning. I don't know whether it's of any value to talk about China. I mean, it's kind of a shit show up here. Down in the States, the most preferred inflation gauge. Of course, a lot of these inflation gauges are sort of made up to serve the banksters' interests and the government bureaucrats' interests. So a lot of it, of course, is a tough pill to swallow, but nonetheless, core PCE, you can see that it basically came in line expectations. That wasn't really so bad. Personal income, hanging in there. Spending, a little bit disappointing. And actually, late yesterday, we did hear from a number of retailers. Costco, of course, seems to be bucking the overall trend, but a lot of sort of, classic brick and mortar retailers reporting that things are looking pretty grim out there on the retail front. So I think that's you can see that in the data. If anything, last report was a bit of an anomaly, almost maybe a little bit outlandish. And I remember when we talked about this last month, it was sort of like there's no way the Fed can cut with that kind of number in their face. So the consumer is really falling off here. It makes sense. Um, we have been for a very long time sort of lulled into this. Interest rates are really low. Buy on credit. We're a debt-based society, so just ramp up that debt. And I hate to say it, but I would make the argument that interest rates now, as of basically that Jupiter Saturn cross that we just went through, sure hope you all learn from that. Interest rates probably now will be going up for easily the better part of 40 years. It will be a long, slow, gradual grind higher, but on a relative basis, going from 0 to even 0.1, I mean, you can't even measure the percentage. It's infinity. So while it may seem incrementally small, going from like 1% to 5% is actually a massive increase, like relatively speaking. So we're bumping up here in the short term. And then, we'll go through our next Jupiter Saturn cross, and that comes in 35. And then the cycle from 35 up to 55 or thereabouts. That's when interest rates are probably going to go back up to double digit. And the absolute nightmare debt scenario that these jerks have painted us into, mortgaging your kid's future constantly, tax breaks for the rich all through the junior Bush years and then Obama years and then Trump years. They just kept doing it over and over. More tax cuts, more tax cuts, more tax cuts. And really the debt, and you see headlines, the debt's absolutely out of control. Well, when interest rates get double digit, it probably bankrupts us, but oh well, we'll cross that bridge when we come to it. Hopefully, my prison sentence in this crazy existence will be over. But anyway, um, so consumers feeling the pain. I think everybody is acknowledging that, and really, this was their only way to actually control this inflation problem. You can't bring cheap slave Chinese labor back to the market. In fact, I think Chinese workers now are actually demanding similar wage levels as their Western counterparts. So that slave labor, cheap products, cheap goods, all that, those days are long gone. And if anything, we've got this massive overhang um, of the baby boomers all demanding their retirement benefits that are just going to just weigh on our society. Um, some internal measures of this PCE that the Fed likes to follow. You notice this price index. It actually ticked a little bit. People were kind of hoping that it was going to tick down, but it basically stayed the same. Probably the thing that's going to catch people's attention here is the price index year over year. So in comparison to last year, notice these prices are not going down. And if anything, they even came in a little bit hotter than expectations. People were kind of hoping that they would be growing at a little bit less pace, but they're actually coming in pretty firm here. This is going to be a real slog for the bankster crooks to actually get this number back below 2%. My hunch is that this doesn't get back below 2% in earnest for easily the next few years. Thank you, Chris. On the econ front itself, the Chicago area, and I don't know whether you've noticed these big US cities, but they're absolute disasters. And I don't know what the hell they're doing in my country, but they're basically turning the Canadian cities into basically these US equivalents. I mean, the stories coming out of Toronto right now are just horrible. But anyway, Chicago PMI, the Chicago area, coming in less than expectations. So inflationary pressures, price pressures still there. They're not abating. And the consumer is feeling it. They're definitely feeling the pinch. And areas, big sort of urban areas, how bad do these internal sort of suburbs, but like the I don't even know what you call them, like the ghettos, how bad in these cities? Like, if I understand, South Chicago is extremely dangerous to your health. Try and avoid that like the plague if you can. And the business activity is not getting any better. So this is quite a disastrous society that we've inherited here. Oh well. Anyway, I wasn't expecting all that to go that direction, but anyway, just sort of saying it as it is. Fed can't cut rates. Consumer is very weak, and regional measures of economic activity are coming in relatively poor. And of course, you have this political backdrop. A couple of really big bombshells dropped. Obviously, Mr. Trump. This is going to be quite a football going forward. I actually make the argument, and I made this argument in the lounge yesterday, that ironically enough, there's actually no such thing as bad press. And sometimes people bark at me. I'm a little bit flagrant, but in a weird sort of way, actually, it's maybe sometimes, especially in this world. I mean, it's slightly polarizing, but in this world, actually being a little bit of polarizing actually brings some of the moths to the candle kind of idea. But we have an interesting situation here politically. Two sort of really dangerous powder kegs. Number one, obviously, with Mr. Trump and his now criminal conviction, which a lot of people have said this is just, it's almost it's almost, I mean, you don't want to laugh about this because it's so serious, but it's shocking when you actually look. And I think Mr. Trump has a case. Like they still can't really figure out what the hell laws he actually broke, which is kind of funny in a weird sort of way. But anyway, the expectation I think is that Mr. Trump will appeal this to a higher court. And there is lots and lots of evidence in this trial that this thing, or I don't know whether evidence is the right word, uh, lots and lots of stuff that would actually validate that this judgment should be thrown out, whether it be the judge himself, the instructions to the jury, the just one thing after another after another. Having said that, it is on the books that Mr. Trump is now a convicted felon. What I found fascinating, of course, is that the Democrats, they all went like sort of, circle jerk orgy crazy. And then, what makes you sick is these clowns go out and they start political campaigning and begging for money, political donations and stuff. The Bidens and the Camillas or whatever her name is, just like literally right after. It's just it's such bad form. But what I did find really interesting about this is, oh, by the way, while this was happening, and of course the American populace is all up in arms over this, Mr. Biden has basically now opened the doors for, to all intents and purposes, Russia could justifiably actually start escalating this war in Ukraine. And, how hot does it get? If you actually start hearing that Russians are being killed, Russian citizens are being killed by American weapons inside Russia, and that's kind of odd. Why are they going after the nuclear radar installations in central Russia? Well, how the hell does that have anything to do with Ukraine? So very, very suspicious shit going on down here. And, basically they took the opportunity, a nice big smoke screen here with Mr. Trump to jam through. Now the Ukrainians can use Russia or Russian, American and NATO made weapons on Russian soil. I'm not going to sugarcoat this. It's no good either way. I mean, Russia and Mr. Putin basically they got 500,000 Russian lads' blood on their hands. I mean, I sure hope Mr. Putin has to stand in front of his maker and his maker says, excuse me, Mr. Putin, you have 500,000 Russian boys, mothers to answer to in the afterlife. I don't understand this world. Makes no sense to me at all. So anyway, political rhetoric. As I said, it's getting stupid again in my country. They're actually literally making plans for the next lockdown and joking and having fun about how much power these bureaucrats, non-elected officials have in my country. Now they can push people around and do whatever they, bark and tell them whatever they want. You just left shaking your head. Having said that, actually, one thing that was kind of fun was the level 3ers. It is so cool. One thing I really enjoy is just showing our students a whole bunch of new tools and stuff for them to use. And the level 3ers now are doing the ATR script. Big shout out to past students who actually put together scripts for us to use. We'll take a look at this kind of stuff in the after party. A little surprised that Bitcoin here didn't give me a fill. I had talked in the community about how Bitcoin was basically range bound. And this gap right here on this chart actually represented the place where I actually got out of my last trade. And I had the order working right at the gap level. It came up. It literally traded to the candle tail. And it did not fill the gap in. It just traded to the tail and then it backed away. I was like, oh man, holy bad luck. And we even got 8s and 9s. If you ever watch any of Julian's videos, he loves his Tom DeMark and 8s and 9s. So, his trend line resistance, it was a gap fill. This is like technically a reload short zone. Inside bar failure, 8s and 9s on the Tom DeMark. Just tons of reasons to justify shorting. And I got no fill there. Boo. Oh, well, that's where it goes. You know, you can see the chart. You know, it's not a hell of a lot to talk to you guys about. I mean, I've talked about breadth, so you all know what the message has been from the Beamish. There was that fun little short that I had on right after the PCE announcement. They rallied the market right into reload short zone. It was absolutely perfect. Nice, beautiful little inside bar. Sold two. Took one off at 2 to 1. Put the stop at scratch. And look how they came up. They ran my stop and then they just fucking puked the market out. But, it's the way a trader's life goes. You just got to roll with the punches. I think, as I had said earlier, didn't really, we've got this crazy ass megaphone working in crude oil right now. It's up and down like a horse drawers, huge range. And unfortunately, in this kind of scenario, I can't do anything right here. So I didn't really do anything in crude today. In the after party, we'll circle around, take a look at the options expiry today and the implications of open interest levels. Ironically enough, I think is actually pretty darn cliche. One thing I did notice that kind of surprised me a bit was you can see tech stocks getting absolutely destroyed, but the Dow is up. What the hell's going on here? This makes no sense. I mean, it's such a bizarre world that we're living in. And now it's kind of like they've got like two different stock markets. And on one day, we'll push this index up. And on another day, we'll push this index up. And they're just seesawing back and forth. So do we ever is this rise only market now for the stock market? Is this what happens here? I found this fascinating today. And I also noticed too yesterday something that kind of jumped out at me. Russell 2000, when the NASDAQ and all that, like Salesforce.com, just an absolute train wreck there. When they were reporting and a lot of the tech stocks were under a lot of pressure, Russell 2000 was actually up. I suppose finish off this free broadcast about a half an hour here for you, and then we'll circle back and hang out with you guys for the broiler chickens on Sunday. Looking at the sort of broader market, as we see here, the bonds actually really enjoyed that inflation data. So the bonds are feeling actually pretty okay. I think they were a little bit worried. A lot of the Fed talkers recently have been talking about the need to raise interest rates. I think that PCE data, I don't think it's a case for raising rates. It's not a case for lowering rates. But I think what ended up happening here was this was kind of like a double-edged sword. Number one, the tech space got bid up there a little bit too much, I think. And if you look at stocks like Salesforce.com, I mean, there was yesterday, just absolute train wreck. 20% in one day. Boom. Blue chip my ass. But the problem is look where they ran this thing, 125 all the way up to $300. What the hell are these idiots doing? So, I mean, in this kind of environment, seeing a 20% haircut in one day actually really isn't that outlandish. But look at the volume. Wow. Huge selling there. So I don't know how long it's going to take for this thing to actually bottom out. But notice you see here, lower highs and lower lows. Then finally we end up start putting in higher lows and higher highs, and then we get back to a bull. How long this actually takes to play out, I don't know. This is technically a Dow stock, so it is interesting how this thing could get its ass kicked like this, and the Dow still doesn't really do anything. That was a little bit of a head scratcher there, but nonetheless, you can see that Dow kind of bucking the overall trend, actually pointing higher. And I have a feeling this might also be kind of like the financials. I did hear that Warren Buffett went and put a whole bunch of money into Chubb Insurance. It's not really a stock I could justify buying. Brian and his, cheap ass nature. I can't buy markets that look like that. It's just too expensive. Having said that, obviously Mr. Buffett is Mr. Buffett, and he went and bought. So this thing getting bid up here. I think a lot of the financial stocks are doing a little bit better on the anticipation that maybe the Fed is done raising rates. And you can see them down here. Bank of America is actually up on the day. Um, and actually interesting to see who is strong. Well, it's healthcare names that are strong here. Energy's catching a bit of a bid, which is kind of ironic considering the way crude's acting. And it's just the selling is actually concentrated in good old tech and sort of, this 21st century kind of economy talk. Very, very odd disconnect, brick and mortar 21st century. And unfortunately, all you crypto fans, you're obviously crypto is going to fall in this 21st century kind of conversation. And the irony of it all is that really there's not a hell of a lot changing here. I wouldn't really say Bitcoin's a bear. I would just simply say that, man, we have come an awful long way very quickly. And could we take like 6 months just to clean this up, maybe go sideways a little bit, play in our playground? Hell, we haven't even come back to Colin and his pump chaser zone. And this is, you should expect 38.2 retracements at any given point in time. So we had, of course, Brian's birthday dump. Merry Christmas. Happy Hanukkah, whatever you want to call it. Dead cat bounce following that into the end of the month of May. This isn't an outright sell signal, but you can see how this week is shaping up. If this turns out to be an inside bar, and then, Sunday we do broiler chickens, and then Monday we print a new candle, and then we go through this low here. If this looks like this by Sunday, then that actually does represent a 3-bar fractal sell signal. I think probably more importantly, it's just this conversation that we are back up against top end of range. There is that big honking trend line off the top there. And really, I mean, I even put a tweet out and it was cool. I even said things like, this should be a really interesting tweet to watch age, because we had trade location. There's good old Julian and his Tom DeMarks. We got Foggenbaum. We got price channels. I mean, there were just a ton of reasons. Go look at the tweet. And I think I listed like 6 different technical reasons why the market should fail here. And sure enough, I mean, it hasn't been an absolute disaster yet. But we are slowly working our way lower. And I think this trade is basically working its way. I might argue that if we do, you can see how close we came. In fact, you could even argue that, well, that's a tough one. If we do get down into this area here, I might argue that we could move stops to scratch. You can see how the 30 SMA here should act as support. That's a good illustration of that. You can see how the 30 SMA on the ES itself is acting as support right now. It also has an uptrend line. So I wouldn't be surprised if we dump. And like I said, in the after party, we'll go look at the options information. I think the options data, max pain, you hear Julian talk about that. I use a completely different concept, but nonetheless, it's basically the same idea. There's a lot of incentive for Wall Street to have the ES go out just basically right in this area on the SPYs. So we are at support. I would actually call this a moving average sandwich now. And I think Bitcoin's also going to be trapped in the moving average sandwich. It's a little hard to see with this, all these different colored boxes on here, but there's the fast moving average. We're below that now. And here is the slow moving average. So my hunch is you're probably going to find some support in here, probably against these lows, maybe even against these lows. And also to A, B, C, D, that also takes us down into this area. What I would say as a good support line should be this dotted line. My hunch is if there is some sort of dump, we probably don't go beyond this level. What was interesting was we were talking, Deribit has a very large options expiry today. Maybe in the after party, we'll look at that as well. And somebody was posting in the lounge that 65,000 is sort of their magic number, max pain, all that kind of talk in Deribit Bitcoin futures options land. So do think that that's just, it is working its way down. How long this trade takes to develop, it might go on right into the end of June. We have talked about this before. I think they'll sell the market off into the next FOMC meeting, and then into the next Fed minutes following, they'll rally the market, and that's been basically their path over the past little while. And that, I suppose, here is this is the actual trade metric numbers of this particular trade. It's a fairly big risk trade. Just even shorting a tenth of a Bitcoin, it's $500 risk. And of course, we're looking to take off the position at $1,000 profit. So that's basically your market heading into the weekend. And of course, you got these little fog and bombs, which probably should act as support here, but now you can see this bigger fog and bomb is going to fire. So that's going to start painting downside objectives like, oh, look at that right off the screen. That's always a good sign. Down in here, 62 and change, 62 and a half. And of course, if we fire through this low, then you can draw an even bigger fog and bomb. Maybe we'll save that for the after party. I guess lastly, what I've been telling people, especially getting ready for the PCE number this morning, was, this is the broader crypto currency market. And really, it looked to me like they were just forming some sort of coil heading into this big econ event. And my message to the community, you want to keep this as simple as possible. If this turned into a W, then great. We're a bull, rock and roll. If you saw prices up here, get out there and have some fun trading your shit coins. However, if this turns into an M, look out below. And that would imply a break of that low right there. We've probably got some trouble ahead. So I actually, even now, I don't really have an outright sell here because we haven't, this low has not been taken out, but we do have 3-bar fractal fail. We do have 8s and 9s on your Tom DeMark. There's another 3-bar fractal fail. And of course, if we change this to a line chart, the M's are already in place. So I think the bias is to the downside if you were going to lean one way. And of course, also too, remember that this is technically a shorting area. Red boxes are for immediate unloading of longs, passengers. Green boxes all the way down here are for buying. So just understand this is a pretty risky market still. And on that note, I think I'll probably finish the free broadcast. And you're all like, oh, thanks, Brian. In the after party, we'll spend some time answering some questions about things like country funds, which were posed recently. Then, like I said, we'll take a look at some of the options expiry information. Might even take a look at how ATR has played into all this. And also maybe take a quick boo at some of Sjord's fundamental picks. And whether any bottoms are starting to form in any of them. And then lastly, is the little old lady doing anything here? Actually, I did do a little bit of buying in Solana land recently. And I actually would, believe it or not, actually like to start doing some nibbling in sort of the senior little old lady portfolio. And I haven't done much in there lately because there really hasn't been a heck of a lot to do. So okay, there's your summary for the day. Unfortunately, econs, meh, economic activity barometers, consumer measurements, not good. Inflation numbers still sticky. So you can't really justify lowering interest rates in the face of that. As a result, stocks and risk assets in general feel like they're, melting down here a bit. But they always say, what's the cure for high prices? I'll let you answer that. And if you don't know what the answer is for the cure for high prices, then maybe consider joining our community. and you will learn what the cure for high prices is. All right. No, and the answer is not warfare. Good. All right. Have yourselves a great day. All the best. Hugs and kisses. We'll see everybody for broiler chickens on Sunday. All the best, and bye for now.